Hi, ladies and gents. Welcome back to what's now the fourth of four podcasts I've done on the sales and the purchases journals. So there's four of them. We've done the purchases journal, we've done the purchase returns, now we've done the sales, and finally we've done the sales returns journal. And what we're also going to look at in this podcast is a credit note. That's a source document for any returns, which is a very important document. Credit note itself looks suspiciously like a debit note, and we'd expect that because it does contain all the same information. The big difference is that it's done by the company which originally supplied the goods. So when they get their sales returns back, they will send the credit note out agreeing that those goods should have been bought back, and they will be crediting their customer and reducing the amount of money that they owe them. So it's going to have somewhere written on it credit notes. It's going to have the supplying company's name, so the company that originally supplied the goods. It's going to have the customer's name and address. It will have a unique credit note reference number, the date of the transaction, and then you're going to have the unit information very much like the debit note. So again, it's the same burgers that have been accepted back now by Mighty Burgers. And the unit price was $20. There were four of them. So without a discount, they would have charged Khalid Traders $80. However, they haven't. They've given them a 15% discount. So the amount they're going to credit their account with is $68. It's important that we make sure we use this figure without the discount, with the discount taken off, because otherwise what you're going to do is reduce the bill that you are owed by $80, not the $68 you'd actually charged your customer for these goods. So similarly with a pack of buns, okay, there's a discount there of $2. So the amount that will be credited to the customer's account should be only $18, or the total of $86 for both sets of goods that have been returned. Then a couple of questions. You've got one which is a standard, just fill in all the information, and once you've done that, there shouldn't be a problem. And the second one, you'll need to do a little bit of some calculations yourself to work out what the unit price originally was, what the amount is, etc. So it'll be interesting to see how you got on with those. Right, what I would do, pause the video now, and then come back in a couple of minutes' time once you've completed it, and you can have a look at the sales returns journal. Sales returns journal looks suspiciously like all the other journals we've done. Quite a lot of businesses will record the gross total and the trade discount. In exams, partly because of time, more likely you'll just see the net total, and also it saves on printing. So these are the net totals after the discounts have been deducted from the gross totals. In this case here, it's linked to the sales journal video that I did earlier. But what we're going to do is put each of the transactions into the sales ledger, into the three customer accounts, and then the totals are going to go into the sales returns T account, which will be in the general ledger. And again, that's quite a common exam question. So the sales returns ledger account is always in the general ledger, not the sales ledger. Right, here goes, guys. First one, 13th to the 11th, 15, and it's a sales return. And just going to cheat a little bit. I'm going to copy that and paste that in, so we're typing it, because there's one for each of the customers. Okay, it's going on the credit side. It's going on the credit side because it's going to reduce the asset of being owed money. So trade receivable is normally an asset because they owe the business money. However, they're going to owe them less money now because of these returns. But the final one's 20, and that's on the 30th November. Okay, and then we just need to find out the total of all of our returns. And then to save putting three individual entries into the sales returns, we're going to put the total of 113 on the last day of the month, which is November, so it's the 30th. And it's come from the sales returns journal. Fraction wise, so we can see it all, and there we go, no problems. Right. Last couple of questions for you guys to do on here. You'll just need to put the returns into the right place. Don't forget to debit entry for sales returns, because it's the opposite of sales, which are an income, or the other way of looking at it, we're gaining back those goods, so we're regaining an asset. Good luck with the questions. Hope you enjoyed the video, and hopefully we're all going to be excellent at doing this when it comes to an exam. Thanks a lot, guys. Bye bye.